Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, July 8th, and we got some important data to go over today. So we'll start off with the non-farm payrolls. This is brought to us by the Bureau of Labor Statistics for the month of June. So this is not an error here. The 11,000 jobs for May was actually revised lower from I think it was like 35 or 38,000, but April was revised a little bit higher. So this is pretty horrendous when you look at it. Only 11,000 new jobs created in 1 month. But anyways, we had 173,000 for the forecast for June, and it jumped all the way up to 287. So this is actually a really great number here, even if you factor into the employees of Verizon that had a strike. That was about 35,000 people. So let's say if you had 45,000 people go back to work, that's still a great number here. You still got 250,000 roughly in that numbers there. So good overall numbers, highest we've seen this year. But when you look at overall, there's still some concern that the average new job created is still slower than what we saw the fourth quarter of last year. Now, that could be a little deceiving in the sense that, as I've indicated back in the fourth quarter, when we have the holiday seasons, we get a lot of temporary new jobs, and they still factor that into everything. So a lot of those new jobs that were created at that time were only temporary jobs for the holidays. Also, unemployment rate for the month of June, we had a 4.7. Remember, it dropped down to in May to 4.7, and that was due to so many people, about over 600,000 people, dropped out of the labor participating in the labor market, and so it dropped down to 4.7. Forecast was supposed to go up to a 4.8, and it went all the way up to 4.9 again because more people started coming back into the labor market here, so they're feeling a little bit more confident about where things are at in terms of jobs. Average hourly earnings we got for the month of June. So back in May we had a 0.2% increase. They thought June would go up, forecast at 0.2 as well, but it came up 0.1%. So still not too bad. We're up year over year for increase of about approximately 2.6%. People earning more from year over year at 2.6% more. So not bad start. At least people are making a little bit more money versus the opposite direction here. So that's good sign here. Stock market is actually way up here. They like the job numbers coming in here again, kind of putting some of the Brexit concerns to the wayside as they see that maybe jobs may be turning a corner and maybe improving here. Bond market, here's where we are. We, as you can see, initially went way down when the stock market was taken off. Like the Dow is at actually over 18,000 so far. We're actually past right now where the before the Brexit happened. So we're actually at a better position, right, like 18,100 some right now. But as the bond market came down, we tested almost touching here the 10-day moving average, but right now we're up about 6 basis points. So what does that basically tell us is that there's still a lot of people not feeling that we're safe exactly. So especially when everybody panicked about Brexit and went backwards, and there's still a lot of uncertainty, there's still some investors out there not sold on the whole notion of that. So right now there's kind of an emotional swing in the stock market, but there's a few, as you can see, that are not sold on that and are actually hedging it again with the bonds here. So typically they compete for dollars. So if the stock market's going up, bond market's typically going down. But in this scenario, we're kind of seeing both indexes up for the day. So this is good news actually for bond market, which is also good news for interest rates. So initially in the morning on the East Coast, they probably had worse pricing, and right now would have better pricing as a result. Here on the West Coast, Pacific Standard Time, pricing is about the same where we left off yesterday because it's only about 6 basis points from where we left off yesterday so far. All right, folks. Hey, you guys have a great coming weekend here. I hope you guys enjoy yourselves and be safe, and we'll see you guys on Monday. Thanks for watching. Bye-bye.